Now, every investor's portfolio is somewhere between low yield, high growth, and high yield, low growth. One of them offers a lot more capital gain potential, and one of them offers a lot more income now, but maybe with less upside later on. Now, if you guys like myself fall somewhere in the middle of this, meaning that you want a portfolio that not only offers you high growth potential, but also you want high yield and a ton of income, then this video is going to be perfect for you because we're going to be going through a very simple yet effective 3 ETF portfolio made up of VOO, QQQY, and SPYI. 3 ETFs that when combined offer a ton of exposure to upside, to growth, but also a ton of income generation from day one. I'm going to share with you guys all the details about every one of these ETFs and why these 3 together can make the perfect portfolio, offering investors the best of both worlds of high yield, low growth, and low yield, high growth, all in one simple 3 ETF portfolio. So if this sort of thing interests you at all, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, to be honest, one of the main reasons I love making videos like this is probably because my portfolio, as you can see right here on the screen, which pays me over $108,000 per year in dividends, is far from simple, is far from minimal. And this is simply because after around 10 years of investing, buying dividend paying stocks and ETFs basically every single day the market's been open, I've now almost a decade later found myself as somewhat of a hoarder when it comes to stocks and ETFs, holding on to over 50 individual positions, even though you can definitely get the job done with a few super high quality ETFs like we're going to talk about in today's video. Which brings me right into the first ETF. This is going to be 1/3 of the portfolio, VOO, or the Vanguard S&P 500 ETF. Now, for those of you guys that might not know, VOO invests in stocks in the S&P 500 index, representing 500 of the largest US companies. VOO's goal is to closely track the index's return, which is considered a gauge of the overall US stock returns. Now, there's really honestly nothing even bad to say about VOO altogether. The ETF is super cheap to hold on to. It does offer a small dividend right off the bat. The ETF is ultra diversified, 500 individual stocks within the ETF, and tons of different sector exposure, meaning that if one sector has a bad year, a bad quarter, whatever the case might be, the overall holdings will still probably be okay. Not to mention, looking at the performance of VOO, and this is since 2010, VOO is up around 664% over this time frame. Now, sure, over this time frame, have there been some stocks that have outperformed VOO or some ETFs? Maybe, but overall, VOO or the S&P 500 is truly a gauge of the overall markets. And like you saw a second ago, as far as the performance goes, this ETF has been an absolute monster. Now, the next ETF in the Trinity 3 ETF portfolio would be SPYI, the newest S&P 500 high income ETF. So once again, an ETF that's going to offer us S&P 500 exposure, but this time through a high income strategy. Now, how much income are we talking? Around 12% distribution rate as of right now, which isn't the highest amount of income you can probably find across the market, but this ETF has been very stable as far as NAV goes, no decay whatsoever as far as price since inception, and has been paying out more or less 50 cents per share per month every single month since it started trading. Now, the way this ETF works is that it generates income from investing in the S&P 500 and then implementing a data-driven call option strategy. The ETF is also very tax efficient, paying out a majority of the distributions in the form of ROC, return of capital, which is definitely something that I'm seeking. The ETF's performance since inception annualizes around 13-14%, not bad whatsoever, especially for an ETF that's going to offer you a lot more cash flow from day one. The next ETF in this simple 3 ETF portfolio that's going to offer you a ton of growth, a ton of income generation right from day one, QQQY. This is going to be the same thing as the last one. The only difference is it's offering you NASDAQ 100 exposure, which is a little bit higher beta, which is why this ETF offers a little bit higher distribution rate. This fund seeks to distribute high monthly income generated from investing in the constituents of the NASDAQ 100 index and then implementing a data-driven call option strategy to generate a ton of income. Now, how much income are you asking? Around 60 cents per share per month on average, more or less, which is a ton of income, relatively speaking. Now, again, out of all the high income ETFs across the market these days, and trust me, there are a ton. Why this one specifically? Well, this ETF offers you, of course, the NASDAQ 100 exposure, but through a high income strategy, also offers a ton of their distributions in the form of return of capital. This ETF also has not decayed whatsoever as far as price performance goes, and the annual performance of this ETF has been around 19%. All to say that when it comes to high income ETFs that offer a ton of income generation, but also are relatively stable, this is one of my favorites across the entire markets. Now, the cool thing about investing is that you can build out a portfolio like mine that has over 50 individual positions in it, some offering a lot more growth exposure like my 1001 shares of Apple stock, and some positions offering a ton of income exposure from day one. But the cool thing about modeling a very simple 3 ETF portfolio like this one with VU, SPYI, and QQQY is that they've all offered a nice positive total return, but portions of the portfolio are much more focused, geared towards growth, capital appreciation, and other parts of the portfolio much more income based. That's why, especially if you're newer to investing, take some time and ask yourself what you're seeking as far as outcome goes. Ask yourself in the long term, are you very, very concerned about having a ton of capital gains? Or maybe are you okay with a little bit less upside, but a lot more income generation now? Regardless, if I were to build a 3 ETF portfolio that, like I said, matches my goals more or less, I'd build it something like this with these 3 ETFs offering a ton of income generation, but also some huge growth. So now that I share with you guys the Trinity 3 ETF portfolio that offers sort of a little bit of everything inside of it, before I go, I do have a question for you guys down below. If I were to ask you to build a 3 ETF portfolio that offers exactly what you're looking for, which 3 ETFs would you specifically have inside of it? Let us know in the comments down below. If you guys enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.